Imagine owning a $10,000 investment that's about to plummet by 50% in just one day. You're not alone, as millions of dollars are lost annually due to short selling mistakes. But what if you could protect your stock from these devastating attacks? In this video, we'll dive into the psychology of short sellers and reveal the secrets to safeguarding your portfolio. You'll learn how to identify the mindset of a short seller, understand their motivation, and develop strategies to outsmart them. Don't let fear or greed get the best of you. Join me as we explore the world of short selling. Forest Waterwaves, welcome to Psychology of the Short Seller, protecting your stock from attacks. To understand the concept we're about to dive into, let's take a step back. The idea of short selling has been around for centuries, with evidence of its use dating back to 18th century England. Initially, it was used as a way for investors to hedge against losses or speculate on declining stocks. However, over time, the rise of Wall Street and the growth of the financial industry created an environment where short sellers were often villainized. This misconception exists because short selling is misunderstood. Imagine you're standing on the edge of a cliff and your friend is about to jump off. Now, most people would rush to stop them, right? But what if I told you that sometime it's better to let them take the leap? That's basically what short sellers do. They bet against a stock by selling it before buying it back at a lower price. They're not trying to make your money disappear. They're just predicting that the stock will tank. By understanding this mindset, you can protect your own investments from potential attacks and stay one step ahead. Stock footage falling leaves seen when it comes to short selling. One of the biggest misconceptions is that these investors are out to get you. Many people believe that short sellers are malicious or villainous, seeking to destroy companies and their stock prices. However, this couldn't be further from the truth. Short sellers are actually profiting from market inefficiency and correcting price distortion. They're not trying to tank a company's stock. They're trying to make informed bets based on data-driven analysis. By understanding short selling in this way, you can better protect your investment from potential attacks. The mechanics of short selling involve a complex process that can be broken down into several key steps. A short seller buys shares they don't own, essentially borrowing them from the broker or another investor. They then sell these shares at the current market price, with the expectation of buying them back later at a lower price to return to the lender. This means the short seller makes a profit if the stock price falls, but faces significant losses if it rises. To mitigate this risk, short sellers use various strategies such as hedging and stop-loss orders to limit their potential losses. Nature abstract landscape. Imagine you're an investor who recently bought shares of a trendy coffee shop chain. Your research showed that the company's growth was slowing down and its competitors were gaining ground. You decide to short sell your shares by borrowing them from another investor and selling them on the market at the current price. But then, a popular food blogger discovers your investment and starts raving about the chain's new menu items on social media. The blog post goes viral, and suddenly, investors are flocking to buy shares of the coffee shop. Your short sale is now facing a severe attack from the buying frenzy. Successful short sellers know that the psychology of their opponents can be just as valuable as their own. They understand that short sellers' motivation is often rooted in fear, and they use this to their advantage. By anticipating the emotional responses of their counterparts, successful investors can gain a significant edge in the market. This requires a deep understanding of human behavior and emotional psychology. By leveraging this knowledge, you can make more informed investment decisions and protect your stock from attacks, ultimately giving you a competitive edge in the financial world. Let's take a look at another real-world example. Imagine a biotech startup, MedTech, that's developed a revolutionary new treatment for a debilitating disease. The company's stock price soars as investors get excited about the potential for huge returns. But then, a prominent hedge fund manager starts shorting MedTech stock, claiming that the FDA will reject their treatment and the company will go bankrupt. The short seller's bet pays off when the FDA does indeed reject the treatment, causing MedTech stock price to plummet. This highlights how short sellers can be both correct and ruthless in their predictions. Forest at dusk, by the way, if you want to go deeper on this topic. I've linked some resources in the description below, including Personal Capital, which I personally recommend. Investors often view short sellers as villains, but they're actually just trying to make a profit. Two common mistakes people make when it comes to short selling are failing to do their research and assuming all short sellers are motivated by greed. When you don't understand the underlying reasons behind a stock's decline, you can get caught off guard. Additionally, some investors mistakenly think short sellers are always wrong, which can lead them to overreact to market fluctuations. By understanding these pitfalls, you can make more informed decisions and protect your portfolio from potential attacks. Forest landscape footage here is the text. As a short seller, their goal is to profit from a declining stock price. To protect your stock from attacks, try these practical tips. Firstly, monitor short interest ratio by checking financial reports or websites like Yahoo Finance or Google Finance. Next, set up price alerts on your brokerage app to notify you of sudden drops in value. Thirdly, consider hedging strategies such as buying put options to limit potential losses. Finally, stay informed about market trends and news that may impact your stock's value. Use slow-moving water, green forest texture, natural rock formation. As we move forward, the short-selling landscape is expected to evolve with the rise of ESG investing and sustainable practices. With increasing scrutiny from regulators and stakeholders, shorts are being forced to adapt and integrate environmental, social, and governance considerations into their investment strategy. This shift will lead to a more nuanced understanding of risk management and more targeted attacks on undervalued stocks. Investors should be aware of this trend and prepare for a future where short sellers are not just profiteers, but also responsible stewards of capital. In conclusion, our journey through the psychology of short sellers has equipped you with the knowledge to protect your stocks from attacks. Remember, short selling is not about being a villain, but rather about hedging bets and managing risk. By understanding the mindset of short sellers, we've learned to anticipate their strategies and stay one step ahead. You now know how to identify potential risks and develop a plan to mitigate them. To reinforce your new insights, we encourage you to take action this week. Subscribe to our channel for more market analysis and share your thoughts on social media.